How to arrange a large mortgage. I have dedicated my last 20 years of my life in doing such things for hundreds and hundreds of people, and you do need to have a specialist approach in being successful in this field. How do you do it? How do you secure substantial large mortgages? Well, you're going to require a nuanced understanding of the financial landscape, working with high net worth individuals whose circumstances are often complex. They have financial profiles that often don't align with standard high street lending criteria. Traditional lenders may not offer the flexibility needed to accommodate significant large mortgage amount, making specialized approaches and advice essential. During my time, probably from 2003 when I worked for myself, arranging large mortgages with regular features in the Financial Times, How the Super Rich Buy Their Homes, Bloomberg, Forbes, etc. It's kind of all I've done. And the one thing I've learned, you are special, you are unique, your circumstances are unique, and how you go about being super successful when borrowing money is about the approach and understanding your personal circumstances, your balance sheet, your income, your sustainability of income, and from a lender's perspective, mitigating that risk of what happens if it goes wrong. And then from my life, things do go wrong. Things don't always go to plan. You just have to get up, move on, and keep moving forwards. So when you arrange a large mortgage, you need a completely bespoke solution. And when I mean completely bespoke, I'm talking amounts normally above $1 million. If you're looking at super large mortgages, and in America it's jumbo mortgages, high net worth borrowers often benefit from the personalized approach. What I have learned working with many high net worth borrowers, whether you're a celebrity, a billionaire entrepreneur, everyone needs to borrow money because it makes sense. Why do you need to borrow money? Because if you're going to make 10 to 20% of your investments, staying fully invested whilst borrowing at 5 makes complete sense. So in order to be successful, you're going to need a personalized solution tailored to your unique financial situation. And working with us at Million Plus Private Finance, we will focus on creating an innovative solution for your complex situation. And we will ensure that your loan structure aligns with your overall borrowing objective. And what do I mean about loan structures? Well, effectively, you can get 100% loan to value financing. How is what you're going to ask. And it's all about using your balance sheet and the assets that you have on your balance sheet, depending on where you are in your financial journey and what assets are there. So for example, you may have a jet, you may have a yacht, you may have 3, 4, 5 homes. And it's all about being creative in finding the perfect solution for you, whether it's loan to value, whether it's staying fully invested in the marketplace, or whether it's the margin for the debt that you want to borrow and having complete flexibility. Now, what I've learned in the last 20 years is that private bank against high street lenders, the majority of high street lenders will be unable to assist because they won't be able to operate outside of the given loan to value parameters that they have. This is certainly the case that as you go from a 1 million mortgage, the loan to value could be 95% max. 2 million, 3 million, 5. Various lenders will drop from a 95% to a 90% to an 85% to a 70%. So as the purchase price goes up, 1, 2, 3, 5 million, 10 million, 20 million, 50 million. The largest facility I've ever done in my career on real estate on a residential was 85 million. The loan to value will lower. And in certain cases, successful entrepreneurs do not want to sell their investments and other assets to meet these larger deposits as the purchase price goes up. And this is where working with a specialist is vitally important because you then negotiate your position. What do I mean by that? So basically, let's say you have other investments, and most uber wealthy people that are borrowing above 10 million have other investments. And this is where you might have some investments that you can custody on one side of the balance sheet that may have a lending value. You use that lending value plus the property as security to get a higher loan to value. And then yes, from a bank's capital adequacy position, the higher the loan to value, so normally sub 60% is always going to be the cheapest money. But as you move from 60 to 70, 70 to 75, 85, 90, 100, the higher the loan to value, the higher the margin for the debt. But when you provide additional security in other assets, the more liquid those assets are, and in some cases you may hold some cash, some bonds, the higher the loan to value, the leverage can be on those underlying assets. So cash, you can virtually get 95 to 100% loan to value. But every single individual bank will be different. And this is where on larger mortgages, high street lenders do offer a range of mortgage products, but their rigid lending criteria will not fully accommodate the diverse income streams and assets you're going to have as a high net worth individual. Now, in contrast, when you start looking at private banks, this is where you get more flexibility, and they will consider your entire financial position, your investments, your international assets. This holistic assessment will allow for a completely bespoke solution that align with you, the borrower, and your financial strategies. Now, the key things that I've learned is that it's so vitally important to work with a professional advisor. Why? If banks can get away with being lazy, no disrespect to all my banking partners, but if you can get away and say, hey, our margin's 2%, and I know that if you were to give them some additional security or other assets, that margin can drop from 2% to 1.5% because it's lowering the risk profile of the transaction, you're going to get better terms. One of the most important things I've learned is that you are super successful and knowledgeable in your field, but you don't know how to present credit application on a diverse income stream basis with multiple assets in multiple jurisdictions in order to get your large mortgage on the very best terms possible. So higher loan to values are possible. If you Google how the super rich buy their homes, back in that time and at that point, we were able to secure a 90% loan to value on a 50 million purchase. How did that happen? Is that possible? Yes, it is. How did we achieve that? Well, it's working with a bank to say, look, I've got, and in this case, let's call the number 200 million plus of stock. I will custody that stock. No gentleman's agreement that this stock is going to be sold or invested with you, but if my circumstances change, then I will do something with you on a first come first serve basis and negotiate the position. So these kind of solutions are completely bespoke, and lenders will assess your overall balance sheet and the liquidity of each individual item on your balance sheet to assess the likelihood that A, they want you as a client, and B, they can find a solution that gets a win-win. That, in my experience and in my role advising high net worth individuals, has been probably the most important thing. And then sometimes getting 100% loan to value on mortgages exceeding 10 million is ultimately possible depending on how your case is presented. What are the non-negotiables, whether it's loan to value, margin, what income verification you can provide, what currencies that income comes from, dollars, yen, euros, dirhams. So traditional income verification methods do not capture your full financial picture that high net worth borrowers need, and you certainly won't find it with the likes of the Halifax and the Santander. No disrespect to them, it's just not how they lend money. The bespoke solutions are the private banks who can understand uber wealthy individuals and are specialists in consider and understanding diverse income streams, dividends, international earnings, and normally have a global footprint. So for example, some clients that I've helped have had 100 million revolving credit facility, which covers everything they have, whether it's a jet, a yacht, Monaco, ski chalet, holiday home, etc. They have the ability to underwrite individual assets and asset classes, jet, yacht, property, commercial, residential, in order for you to get your large mortgage facility. Credit history on the larger mortgages is, yes, super important. Is it crucial? No, because most uber wealthy, successful people that I know have had bankruptcies, involuntary liquidations, etc. And as I've learned myself, you have to take risk in life. And if you've made 10, 20, 50, 100, 300 billion, whatever the number is, lenders will look at credit scores, but that's more high street lending, not bespoke private bank lending. So in a private bank, you're going to look at your balance sheet, how the money's been made. What does your CV look like? Where did you start? Where did you finish? How did you make your money? Evidence of that first 5 million, 10 million, 20 million. High street lenders will examine credit scores, etc. If you are a UK national and you can prove your income easily, then yes, high street lenders can lend up to 5 million, and yes, and even up to 10 million. But if you're going to push the loan to values and you're going to push the lower margins, then private banks is going to be a better solution. So a strong credit profile will enhance your likelihood of securing a large mortgage and on favorable terms, but it's not essential. Many of my clients have had multiple bankruptcies, and the knowledge that they've acquired has enabled them to push harder and faster. And yes, for normal people, when you're looking at the high street, it is a big no-no. But if you're a multimillionaire and you're buying assets at 5, 10, 20, 50 million, you've obviously taken a high degree of risk, and in sometimes failure, which I prefer to kind of badge as valuable lessons in learning. from my own experiences, help you in a mindset place deal with these challenges. So coming back to high value mortgages, large mortgages, complex mortgages, when you have substantial collateral, real estate, investment portfolios, valuable collectibles, cars, art, wine, every single asset that you own can be leveraged depending on your appetite to risk and depending on what your objective is longer term. So when you have a clear strategy for securing a large mortgage, you need to engage with specialists like myself and my team that collaborate on a regular basis with the high net worth banks in this world, whether it's going to be RBC, Goldman Sachs, JP Morgan, UBS, etc., Citigroup, depending if you're American. If you're looking for amounts of money that are going to be between 10 and 100 million, there's only certain banks that have the experience, the global presence that collaborate with you as a client to achieve your objectives. It's never easy, never is, never going to be, but understanding the game, presentation of your application credit proposal is vitally important. When you work with an expert, you will prepare detailed financial documentation. This will be comprehensive, working with your tax advisors, your family office advisors, accountants, etc. You'll have to provide asset portfolio details, income records, and all of these things will demonstrate a transparency so everyone understands what's available, what's the risk, and what leverage can be achieved with your circumstances. One of the most important things is private personal relationships. I spend a lot of my time meeting with high net worth private bankers that have specialist teams looking after family offices that understand complicated circumstances. The benefits of being in the business for a long time is that these relationships with trusted partners are just that. I've done over 4.2 billion of financing in my career. I'm a trusted individual that's based on relationships. I spent over 20 years of my career developing and presenting complicated situations for high net worth individuals from royal family members in the Middle East, billionaire clients that have been successful in their transactions and in their lifestyle to arrange a large mortgage. So in summary, high net worth individuals unlocking large mortgages necessitates a specialized approach that transcends conventional lending framework. When you engage with an expert specialist working with private banks and other specialist lenders, preparing meticulous financial documentation, borrowers can secure bespoke lending solutions tailored to your individual circumstances. Yes, it's difficult. Yes, it's challenging. Yes, it's time consuming, but it can be achieved. And as I've stated earlier, from a lender's perspective in my other videos, what defines a high net worth individual in the context of lending? Typically, individuals with a net income exceeding £300,000 or assets worth over 3 million are considered high net worth borrowers. Why is this important? Well, from a regulatory perspective, banks can lend a portion of their balance sheet and their lending book in a different kind of way. What I mean by that, instead of being the high street says credit score needs to be A, B, C, and it's 4.5 times income, banks can do 100% loan to value lending. They can lend 10, 20, 30 times their income. You can look at offshore income, inheritance, trust income. So there are solutions. When the bank says no, it's all about being creative. Some questions I get asked: how does a private bank differ from a high street lender? Well, the most important thing is that it's personalized, bespoke, flexible lending, often considering your overall entire financial situation, where high street lenders adhere to like standardized processes and policies. So it's credit score based. Not to mean that if you do have some basic circumstances, there are some very good terms available on the high street for larger mortgages. But from my experience, high net worth individuals wanting 100% loan to value mortgages, and in certain cases across multiple asset classes and at the very lowest margins possible, covering jets, yachts, you're going to have to work with a bespoke lender and a specialist in order to get it done. Now, what types of collateral are acceptable for large mortgages? Well, effectively anything from my experience, whether you have collectibles, art, wine, cars, real estate, commercial property, residential, everything and anything is possible, and it's an asset, and each individual asset has its own asset class. I'm often asked, is international income considered in loan assessments? Yes, of course it is. Many global uber entrepreneurial people have multiple income streams and multiple currencies from multiple countries. Yes, we have specialist lenders that often consider international income and understand this in great detail. So if you're a high net worth individual and you're looking for a large bespoke mortgage solution, I've done it for over 20 years. Highs and lows, anything is possible. It's all about proper preparation, writing a very detailed credit summary, application, proposal in order to get a win-win for both you as a client and B as the bank. It's all about negotiation, presentation, mitigating the risk, understanding and presenting that risk. As always, these videos take me a lot of time and effort, and one of the most important things that I can ask you is to please like, subscribe and share. It means so much to me if you can like and share and subscribe. It adds to the channel. I'm then able to spend more time investing supporting and educating others. I'm looking to raise funds, circa £100,000, to create a promotional video on money. I want to educate the younger people in the world from age 16 to 25 about money. I'm very truly blessed. I've been signed by a talent agency called talentandbrands.com. They have some amazing celebrity talent. They have a fantastic social media talent team. And yes, we have a TV series. Like everything in life, you have to find that sponsorship. So if you're one of my partners and you're in the banking side, the wealth management side, and you'd like to get more involved in content creation, then please consider reaching out to me. We can create an amazing TV series to educate the younger people in our lives who don't understand what a stock is, what a bond is, how to open a bank account, where do I invest my money. So for me, please like and subscribe. There's so much more I want to do on this content creation journey. And thank you for watching, and thank you for supporting.